What's up, members? Welcome to another lesson. We are continuing from where we stopped. So in today's lesson, we are going to look at order blocks. Yeah. Order blocks and right. So I would like you guys to pay attention to what we are going to learn today. So definitely look at order blocks and break of structures. So in this case, what comes first is a break of structure before an order block. So let me show you what order blocks are and what break of structures are. So let's say we are in a bullish type of momentum. Let's say the trade is actually here. It has just done this, right? So in this case, what you do, the market has actually given you what we call a high, right? That's a new high, right? That's the new highest price. Remember, when you trade Forex based on price, it is going to make more sense to you, not just random guess out word, but yeah, keep price as that one thing that you need to look at, just like any other business. So in this case, let's say we have okay, right, okay, fine. In this case, we have the highest high and the lowest low, not the highest high, not the lowest low, but just a higher price and a lower price. So in this case, what you have to do as a trader, you must mark out this, put a zone, you put this trend line. Sometimes it's called a resistance and sometimes they are called a support based on where the market is going. So in this case, I have markouts on the upper side and markouts on the lower side here. So they're also called support and resistance in other terms, but I wouldn't call them, I'll call them a structure, just a structure like that. So in this case, whenever market, let me say in this way. So in this case, the trade will always come, break the structure. It has broken, like it was going to break this zone, or in a good technical term, would say price will now start selling higher than before, which means now price is no longer, this is no longer the highest price, but this is now the highest price. So in this case, let's say because now this is the highest price, in this case now we have the new higher high. So in this case, we would identify this place as the new higher high, and then it's noted as high high, right? That's the new higher high. It can only be a new higher high if this decides to, even if it's here, right? Even if it's here or here or here, if it decides to reverse, but at the moment, that's our new higher high. So in this case, this area, because this structure has been broken, that area is now called break. It's now called break of structure, right? Why? Because it has been broken. This structure has been broken. I'm pretty sure you guys are following. So in this case, whenever a structure has been broken, right? Whenever a structure has been broken like this, it's actually telling us that this commodity is actually going to sell higher, higher, and even higher and even higher. So let me give you another example whereby this price is going to come down and reverse somewhere and then goes again, right? It's actually still telling me the same thing, that this break of structure has now, this structure has now been broken. It's now a break of structure. It's still telling me the same thing, that price is still willing to sell higher and higher. In this case, this is my new lower low, and this is also my new lower low. So I would say, yeah, because this is my new lower low, not new lower low, but new lower high, because it's actually higher than the lowest low. So it's lower high, all right, or higher low, whichever. And then this is my new lower low. As price is creating new higher highs and higher lows, it is also creating new lower lows and new higher highs, like that. This is actually telling me that. So if you, what you have to know is that for you to identify the direction of the market, just know that if your higher low has been broken, right, has been broken, mostly it's denoted as X. If you just know that if your higher low has been broken, then that's an indication for you that price is willing to continue moving in that direction, right? So the same way applies when price is going down. So now I want to show you, because this type of setup is what is called a continuation. I don't know if continuation, whatever. Hey guys, I don't know, but yeah, it's called a continuation setup, right? Yeah, this is actually called a continuation setup. Why? Because price keeps on creating higher highs and higher lows, higher highs and higher lows. So in this case, remember, we are only interested in taking buys in these areas, right? In these areas, because we're actually pushing to the upside, and we only buy at the lowest price, only at the lowest price. And then remember last time we said there is actually something interesting in this areas where the price is reversing, and we have to pay attention. What is it that price is always reversing in this area? And then now we look to the previous price, or look to the previous, what happened in the previous. You will see something in these levels that is actually attracting price to come, so that it can sell to the upside. I mean, it can buy to the upside, right? So this is where you will identify your order blocks. So your order block, this is your order block, and then this is your order block. So we remember we are looking at break of structures and order blocks, because these things they have to go together if you want to trade them successfully. So now let me take you on the charts to show you what we are actually looking at. So I'll give you this example of a trade that I took. I won't even go far. Okay, so in this case, yeah, here. So in this case, we have the highest high. I'm sorry, this is going to be just like the opposite, and we were supposed to be going up. Or let me just look for a setup that's bullish. But if you look at the same things, they're going to be the same. So allow me to use the same setup. So in this case, we have this, which is the highest high. Yeah, which is actually the highest price of this commodity. And then you find that on this high price, we have this lowest price, right? I mean, this one, yeah. This is actually the lowest price, and this one is the highest price. And then on the highest price, you see this is actually low, right? This is actually the lowest price at the moment. And then do you see what happened? Price has come, has broken this new price, right? Since price has broken this new price, and then since price has broken this new price, now we have a break of structure, and we have actually created new, we've actually created new lower low. This is actually the lowest price at the moment, right? And then do you see what happened next? The market went back, right, in this level, went back in this level. And then if you may see, there is something interesting on the let me just put this one here, and then see with something interesting on the previous price. What happened? You see this thing, right? You see this thing that happened. This is what is called, there's some sort of liquidity that was created. I'm pretty sure you guys remember the word liquidity. I already mentioned it. If you can go back in the previous videos, you'll find out. So there's this some sort of liquidity, and this liquidity will always happen before the price pushes either to the upside or to the downside, just the same as here. It's always going to happen before the price pushes up or pushes down. Yeah, and then this is the same thing that happens here. This is liquidity, guys. This whole thing is what we call liquidity, right? It's just an accumulation of price at the same area before it pushes to the downside or before it swings to the upside. So the same thing happens here. So this is actually what your order block is going to be. So your order block is going to be this thing. So this is actually your point of interest. So whenever price breaks your structure, the next thing you have to look at is your order block. So in this case, this is our order block. And then when you look at your order block, that's where price will come, and tap in. That's where to give you opportunities to enter the sell or enter a buy. So in this case, you come with your entry. This is actually what we did just last Friday. Actually, I think I already showed you the setup with your take profit just down here. This is a 1 to 30 risk to reward ratio. You can see something like that. So first thing you must understand, you must look at the structure. Has structure been broken or has structure not been broken? Because it's very important to know those kind of levels for you to trade successfully, right? So another example, yeah, I shouldn't give so many examples, but if you can apply that setup somewhere, it's going to be good. So I'll give you another example of what I did. This is actually another structure. You can see that this is my lowest low at the moment. All right, this is my lowest low at the moment. So because my lowest low has been broken, right? My lowest low has been broken. Now I am willing to, I know that this trade is likely to continue moving to the downside. It's likely to continue selling lower. Why? Because there's this sort of sponsored candle, a mitigation order that sorry guys, I don't have to use deep words because we haven't gotten there, so I will take it simple. Yeah, you can see that this is our lowest low. This is our lowest low, and price had to break this structure. Yeah, like this. Price now is trading below. So as soon as price has been broken, I know that I have to look for my order block, right? So in this case, we have so many order blocks. We have this order block. Okay, we have this order block and we have this order block, but I'm taking the last one, and I'll do another video why you should always take the last order block, all right, or which order block you should decide. But in this case, just know that I've taken the last order block, and I'm looking forward to see price coming in this area and pushing to the downside, right? So I'm pretty sure you guys now understand. So whenever we're trading, two things are involved. It's either price is going to continue moving in that direction, or it's going to reverse in the opposite direction. So now let's look at how price present itself in a set of this was a continuation, now in a set of reversal. All right, reversal. Yeah, in a set of reversal where price reverses and starts going to the opposite side. So I'll use the same setup. So let me just take off everything so we can get back more. Okay. So guys, I'm pretty sure you're understanding this. If you don't understand, please just make sure you send me a message on WhatsApp and I'll come to clarify these things. But so far so good, and don't be afraid. We all want to, yeah. So let's say now the market has done this, right? The market has now come here, and then the market has come down here, right? Okay, we have now broken the structure, right? But before we broke this structure, we have created a lower low, this new lower low, right? So because I've created this new lower low, now let's take off this one. No, I'll leave it there just for the sake of, yeah. So now we have broken this one, and on the other hand, we have come down here to break this one, right? Even this one as well, but let me just remove this one. We shouldn't talk much about the other one, but you have broken this one. So just know that once structure has been broken on the upper side and structure has been broken on the downside, just know that we actually going to push in that direction. I'm pretty sure that makes sense, guys. So in this case, what you have to do is just to come here and look for your order block, because that's where you should keep an eye, because price is going to come in that area, so that it can push to the downside. So in this case, price will actually reverse here, come in this area and push to the downside. That is how you can spot a reversal, right? That is how you can spot a reversal. For a reversal to happen, it's always going to break to the upside, or sometimes it might not even break on the upside, but it always break in that direction. The direction that the market breaks, that's where you have to start looking for buys or start looking for sells. So in this case, I'm pretty sure this has made sense. So now let's go on the charts and see what I am talking about. So in this case, guys, you can see that we were pushing to the downside, and all of a sudden price changed and started pushing to the upside. Started pushing to the upside. So now we actually pushing to the upside. So you can see, right? So I want to explain that scenario that I've said there, why price is actually going up. How did it change? How would you know that price is actually reversing? This is another setup that we took the same Friday. After price finished coming down here, hit our TP, we actually started selling, pushing to the upside. So this is what you have to know, guys. Remember, before price reverses, we're always going to have the lowest low, right? And price actually created this low, it went up and created this high, right? It actually went up and created this high, right? As soon as it created this high, it went down. As it went down, it broke structure on the downside, right? It actually broke structure on the downside. I'm pretty sure you can see this week, this candle that came to break structure on the other side, and then it continued going up, right? If this had broken structure and there was a clear order block, we would say we are going to sell, right? Somewhere here, but price came and broke the structure, right? Do this. Price came and broke the structure. As soon as price came, broke the down structure and the upper structure, we knew that we are going to change the direction and start selling upward. Instead, we came here to identify our order block. All right. So that's where price came and started bouncing back. In that case, we started buying. So I actually took my buys somewhere here, and yeah, I think I showed you that that screenshot. Yeah, but that's where you would consider taking your buys, right? So I've actually experienced two things: how you can identify the trade that is actually changing direction. All right. So another very good example is this one. You see that this is our lowest low, and this is our high. Price is actually, this is actually coming from the bearish. It's now changing to bullish. Prices actually came here, created a low, break this structure, right? Break this structure, and it has also come and break this structure. Instead, we come down here to look for our order block. So now we have actually identified our order block, and this is our order block. Now we enter a buy just as soon as that, put our stop loss just below the order block, and I'll take profit just above this level. And in this case, that is also exactly the zone that I'm also looking at for me to enter this trade, for me to trade this trade successfully, right? So I'm pretty sure I've made myself clear about order blocks and about um, break of structures. So you actually have to understand these things, that every time structure has been broken, just pay attention in that direction where structure has been broken, because that would be the most interesting direction where structure would be broken. So in the next video, I'll explain how to identify the right order block. Otherwise, I may give you time to practice this one so that you can see how you can go about it. Thank you for watching this video, members.